Okay, so there's thousands of mutual funds out there, but let's compare a couple so you can really get a feel for these expenses and how to find them in their mutual funds and online and their prospectuses, which a prospectus gives you the information about the fund in greater detail, and also how you can kind of compare and how to maybe evaluate funds from an expense standpoint. And we'll look at two here. We're going to look at the Vanguard S&P 500 fund, a real standard index fund that low expense type fund, so you can get a feel what that looks like. And we're going to compare it to a Quaker Strategic Growth, a fund I happen to kind of find here to give you some examples of a fund that might have some loads and some different types of expenses, so you can get a feel for how they might differ on maybe both ends of the spectrum. So let's go take a look at these mutual funds and see what we see. Okay, we're over here at Vanguard. You can search Vanguard or Vanguard Group in the Google or whatever, and you might see a home page like this. They change them every once in a while. And I want to show you this because it's sometimes a little harder to find some of their mutual funds and things. You can also search by the name of the ticker symbol, might take you right directly there. But if you're looking at just wanting to look at their list of mutual funds, Vanguard's pretty popular. You just go under personal investors, and then you look under mutual funds. So we're going under investing and then mutual funds, because we're going to look up this Vanguard index type fund and kind of compare it to another fund. So we're going to browse index funds by class, because we're looking at a large cap US stock thing, because we're going to compare this to Quaker. And really what we're looking to do is just to look at expenses. That's all we're looking to do, is we're just going to look at the expense part. You can see Vanguard has money market funds and bond funds. They have a lot of different types of funds. So we're looking for stock funds, and we're looking for large cap. So here's stock funds, here's large cap. You can see they have different types, like dividend growth or growth index. Let's look at just the 500 index fund. This is their bigger fund, their Admiral fund, so it's a little bit more expensive again too, but at least you can get a feel for expenses and how it looks and differs. Whenever you're looking at mutual funds, you can kind of get a feel as far as different things to look for when you're going into the actual fund. And I'll show you a quick way to look up these expenses too at the end of this lesson, so you don't even have to go into the funds. But when we show you the quick way, you still want to know how to go deeper into the funds to find the kind of the small print, as they say. So if I pull up 500 Vanguard 500 index fund, it's the top. Admiral shares is the top 500 U.S. stocks, large cap. It gives you a little overview and all that. And what we're looking for is fees, because this lesson's on fees and expenses. So we're going to click on fees and minimums here. On other funds, it'll say like expenses or fees. Either way, that's what you're looking for, is expenses or fees. And overall, you can start seeing here Vanguard 500, real low. This is 0.05 expense ratio. Now you need like 10 grand to get in this fund. So it's not expensive to get into. The regular 500 funds like 3 grand to get into, and that's like a 0.18 or something. But it gives you a feel for how low the expense ratio can be with like an index fund compared to, let's say, the average of a little over 1% for funds. All right, so that's just the expense ratio. We want to know, is there any loads? It's like you get a real low expense ratio, but if you have a 5% load or charge just to join the fund, well, that really eats away my return even if your expense ratio is low. This expense ratio being that annual cost. That's your yearly annual 0.05 you're paying. So we look down further here at fees. Purchase fee, that would be a load, is none. So great, there's no load to it. There's no redemption fee, so I could sell it after even only a couple weeks or whatever. I don't have to worry about holding it for a certain period. So there's no purchase fee or exit fee or redemption fee. There's no 12B1 fee or any other types of additional fees in there. If you had a certain account, like maybe in a certain type of trust account, they might charge you annually like $20. You'll find that when you go in to set up the actual account. But if we're just doing just investing regular old mutual funds, you can see, wow, this is extremely low, 0.05. A lot of mutual funds in the index category, you can find like around 0.2 to 0.3 as far as a fund expense ratio annually. And heck, there's no annual fee. So if you like an index fund and low expenses, this is an example of a way to go. Let's compare that to the other extreme, which is looking at a fund that's an actively managed fund that's got some pretty high expenses. And I chose this one intentionally just to show the idea of the expenses. And by the way, I'm not recommending one fund over another, though expenses and performance might be obvious with these two. But I just want to educate and show how you want to look at different funds. And this happens to be the Quaker Strategic Growth Fund. It is a large cap fund. It's a large growth fund, so it's a little bit more risky, a little bit more growth than maybe the S&P 500, which is growth and value, a little bit more of a blend, but they're still large cap funds. You can see they're not sharing too much with us right off the bat here. I wish they were sharing a little bit more here. But at least this is the Strategic Growth Fund here. Let's look at the, a lot of times you might go to like a brochure or a fact sheet. Brochures are all just sales, sales, sales. So I like to go sometimes quickly to go to a fact sheet. But even fact sheets can be a little misleading, so you just got to be aware of that as well. So here we are in the Quaker Strategic Growth Fund. You can see they have different classes of shares, Class A, C, and I. I might be like an investor class where you can only buy that through maybe like a reseller, like a broker. And then they have different things like Class A and Class C, and they might vary based on their expenses and other requirements. A Class C might give you less expenses or maybe more, but they might have some other benefits to it. So let's take a look at this. And you can see the expense ratio here, just looking at their fact sheet, they have right here 2.24 versus a 2.99. You can see it's lower in the Class I, but you might need 40 grand to invest and you have to buy from a broker possibly. I didn't go through super detail on Quaker, but that's the idea behind the two. But still, we're at 2.2, 2.9, even 2%. That's pretty high. Considering you got other funds that are less than 1%, even index funds are like in the 0.2, 0.3, 0.4 range. That's money you're paying every year. So every year, if you're in a Class C, you're going to pay 2.99 or 3%. You got to do better than 3% just to break even every year. So you can see how that impacts your return. And one thing I noticed here with Quaker that was a little like, I didn't like, was sometimes you see these things where they show like a growth of $10,000, happens to be US, and they show, like, oh wow, this is Quaker versus the S&P 500 total return. The black is the Quaker and more the gray or brown is the S&P. And you look and say, look at Quaker, they're just kicking butt. Look how great they're doing. Well, the reality is this is since inception. This is not like the recent period. This is like since inception from 1996. So maybe back in 1996 it was a good fund, and because you had that good fund for all those years, it's still maintained it. But how is it done recently? Because that's what we care about, is a little bit more recent, because they might have changed a fund manager or something. So this is not the expense part, but just to give you a feel for it, you can kind of see here when they show returns, like average annual returns. Well, before sales charges, 7.5, but you have these sales charges we're going to talk about in a second. And otherwise, you're at 6.36 after the sales charges over the last 5 years. Compared in this period, compared to like 12% for just a plain old vanilla index fund for the S&P 500, right? I mean, it's getting crushed over the last, last 10 years, right? Versus inception, it does great. So I was a little deceptive on that. I didn't really like that. But we're looking at expenses here. So what do we know so far? Well, we know Class A and Class C shares, they run a 2.2 or 2.9 expense ratio. That's really high. Let's just talk about that's really high. All right, so now we want to know, is there a load? Is there a before charge? Because a lot of times when you have these kind of funds, they might have a fee or a charge in there. And there's more information here. They give you some things around what their holdings are and stuff. But I'm not seeing anything here on this short little fact sheet about loads or other expenses. It's just a short little fact sheet that just gave me some quick information, which is nice. I can look at this right now and say, at a 3% expense ratio, it better be crushing the index, and it doesn't, so that might be kind of worrisome. So what do you do, right? So you got this quick kind of like fact sheet. Well, the next thing you can do is go into the prospectus. That's really where you find all your detail on funds, on mutual funds, is the prospectus. You can see they don't even have a link for it here. You got to go up here, and then you find like this big prospectus with all their funds, and you got to kind of scroll through to find the fund you're looking for. So in the interest of time, because it was kind of icky, I already did that. And so here's from the prospectus, the Quaker Strategic Growth Fund. And this is going to give you a little bit more detail on a lot of areas, in particular like your expenses. So let's see if we can find the sales charge here. Let me blow this up a little bit. And why, yes it is. It's right here. You see where it says maximum sales charge or load imposed on purchases as a percentage of the offering price. So they're obvious, they're honest, they're saying this is what it is. And with Class A shares, it's 5.5%. Holy moly, 5.5% just to get in the door? That's pretty high. Now Class C, an institution where you might have, have bigger things or bigger things you can do, then you have to have more money invested. In fact, it says up here, if you and your family invest or agree to invest in the future at least $50,000 in Quaker funds, you might get a reduction on your sales charge. You might, So if I give you $50,000, maybe I don't have to pay 5.5%. Maybe I can get something a little less. And maybe if it's $100,000, I can get a Class C share. A little more details behind that. But either way, that's pretty high. But even if I was a Class C share, you can see these are the management fees, 1.3. You know, they break down the fees, and there's 12B1 fees. So these are extra fees that are loaded, wrapped up in your expense ratio. These are your annual expenses. They got some other stuff here. They got fund operating expenses. They got all sorts of stuff in here. The bottom line is that you're going to pay 2.24 or 2.99, depending on the class of share you're buying, every year just to hold that. So if I bought, you know, I'm just a regular guy investor and I bought a Class A share, I'm going to pay 5.5% just to buy the fund. And then every year, I'm going to get charged 2.2% on my holdings every year. Compare that to a no-load fund that's zero and might be less than 1% as far as, or average is 1% for even actively managed funds and less for index funds. And you can see then that makes it hard for a company like Quaker and their Quaker Strategic Growth Fund to do well. You know, they're really making their money on the fees that they charge. Is really where that's coming in. So if I was evaluating mutual funds, you know, I would have some concerns about Quaker, and I'd certainly expect some big, you know, returns from them. Okay, so this we dove into these funds and dove into things, you know, pretty deeply, and that's what you want to do. Go in the prospectus and really get deep. But let's say I just want to find information fast. In Google Finance, Yahoo Finance, a lot of places have this. I think I like the Google Finances for finding out expense things, or can find it real quick. And you can just put in the different ticker symbols around that. So I know, or you could just type in the name. So if you're not sure, you know, what you're looking for, you could go into, let's say, Vanguard, and it will pull up all the Vanguard funds, and the more you type it in. In fact, let's look at the Vanguard regular old 500 index, the investor class. We were looking at Admiral, which had super low expense ratios, but you needed 10 grand. This one you don't need as much in. You need like 3 grand, but at least gives you an idea of something, a standard type of fund. Pulls up the current price and all that, but what we're looking for off to the right-hand side here is where we'll find our different expense ratios and expense information in there. And that's what we're really looking for, is there a load? Just if I'm looking quickly without going to a prospectus or really trying to search for all these different funds, I can go right in here into Google Finance, you know, just by going to Google and then Finance, or just searching it. I can look up the company name, the mutual fund, this is the Vanguard Index, and you can see here, front-end load is 0. Deferred load, that would be your back-end load or back-end sales charge. That's 0. And expense ratio of 0.16 for this one, the investor classes versus their Admiral class, where you had to put more money in. So I can see, and there's no management fees or anything. So I can see, you know, no loads, real low expenses, index fund, that's how they do it. Let's compare now to Quaker. You can see how quickly we're able to get this information now. So if we put in Quaker, and if I knew I know Quaker's symbol, but if I didn't, I can just type in Quaker and I can find their Quaker Strategic Growth, right? We were looking at that A shares, right? That had the big front end load. Let's look at that. So here's Quaker, and I can scroll down and I can see right off to the side here, you know, front end load of 5.5% and expense ratio, the overall expense ratio, not broken down, but overall 2.24. It's all loaded in there. There's no deferred load, no back end charge, no extra management fees, but you don't have to worry about that. I'm getting 2.24 every year on that. And it's interesting, under their total assets, they've got 85 million, a little over 85 million in assets, so somebody's investing in them. I'm not sure it would be me, but these are the people who are putting in big bucks to try to avoid some of these charges and these loads. But for us regular investors, you know, that's a pretty hefty number. So yeah, that's where Google Finance is nice. You can just type in the ticker symbol. The ticker symbol is right here. That's like the thing you could look up as far as quickly looking up stock, if you know a ticker symbol. If not, just type in the name and you'll be able to find it in there.